Hi, this is Kerry Artek with Wicked Stocks bringing you your daily Tesla report for Wednesday, May 1st, 2024. Before I click on the charts, I want to encourage you to please click like, share, subscribe, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analysis. Daily analysis in the SPY and the Triple Q, weekly analysis in the S&P 500 index, the NASDAQ 100 index, and Apple, as well as 2 individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week out to the 3 to 5 month swing trader, always looking for 20% moves on those underlying stocks. We've already put out 2 stock picks this week alone, so check out wickedstocks.com. We offer a 5-day free trial up front. You can't go wrong. Check it out. Anyway, let's check out the Tesla chart. Where to begin? I actually want to kind of begin, we don't really show it anymore, but there was a channel bottom that we closed below a few weeks ago and then back above. I can show it most dramatically, I suppose, on the daily chart, even though we still don't show that formation. But a couple of weeks ago, we were clearly below and settling below, a weekly settlement below a long-term channel bottom that spanned some 6-8 months. And then Wednesday of last week, we had the earnings where we gapped back above everything, and it was this gap higher that indicated recovery to 175.90. Well, as it turns out, with the China automated driving announcement this week on Monday, we once again gapped above a key area. 175.90 is our new support. 175.90 can absorb selling through the month of May, and above which I'm going to point to, let's go back. Let's continue with, here's the weekly chart. No, this is the daily chart. 175.90 can contain selling through May, and above which this long-term channel top at 228.13 remains, I want to say a 2 to 3 month target, because that's what I was saying a couple of weeks ago when volatility was much more restrained. But present volatility allows this possibly by the end of May. On the way up, I have 207.06. I'm going to call this a 1 to 2 week target. So I think you can bottom pick 175.90. And by the way, the same formation on the weekly chart is at 177.04. So it is 175.90 to 177.04. This level, this area in reach today below 184.54. I can show that right here. There's nothing more than the low of the high. We closed below that on Tuesday. This does imply continued weakness as we move into Wednesday. 175.90, 177.04 in reach today below 184.54 and able to contain selling through May. And once tested, within a week or two, we can rally up to 207.06. And as I say, possibly over the next 3 to 5 weeks, inside of 2 months, I would think 228.13 expected above 175.90. Now, if we happen to close today below 175.90, all bets are off. I would expect this 160.51 area you can see lower right here within, could be several days with present volatility. But I really think that closing below 175.90, we can continue into the 130s again. I don't show it marked very well, but I will point it out. If we close below 175.90 today, yes, I'm expecting 160.51 within several days given present volatility. But over the next few weeks, we can fall back to this long-term trend line that is presently at 138.35 that we did test a couple of weeks ago and held nicely. At the time, this was a session containment level and may stay that way. It depends on if other things show up on the chart at the time. This is a very dynamic approach to trading and trend identification, but let's put it this way. If we close below 175.90 and you recently went long, let's just say over the last day or two, in anticipation of the low 200s or in anticipation of the 228.13 formation, my suggestion, if we close below 175.90, is to exit your long positions if your time horizon is only 3 to 5 days out to 3 to 5 weeks, because I think over the next a couple of weeks, 2-3 weeks, we can fall back into the upper 130s again and potentially even lower. So there's that. If we do close below 175.90 and you're an options trader, you might reach for 140 strike out of the money puts. This is probably a 1 to 2 week play, and so you want to go out about a month and a half, I think, on the expiration, just to prevent that time decay element over the following 2 to 3 weeks. Until then, bottom picking 175.90 to 177.04, expecting 207.06 within 1 to 2 weeks, probably by the end of next week or sooner, 228.13 by the end of May. I think those are all realistic. Let's go back to the 184. Where are you? 184.54. If we happen to push or open above it, I'm looking for the correct chart here to show you that we do have, bear with me, I'm sorry to hold you up like this, 184.54. If we push or open above it, might we test 200.11 today? We certainly could. I wouldn't expect it. All of the minor points on the way up, by the way, have been carefully chosen. I will say that if we close back above 184.54, that will keep 200.11 in reach within a day or two. And yes, it can contain daily buying pressures, but you've got 207.06 just above it. And so if we were closer to 200.11, if we were trading presently in the upper 190s, this would only be an intraday resistance level, because I do think the market wants to test 207.06, 200.11 on the way up, able to contain session strength. So for day traders, pushing, especially opening above 184.54, I think the long side is in. The market can recover. We could possibly reach 200.11 today, where a daily high can be placed. And I'll say that if we close today above 200.11, 207.06 is likely tomorrow, where we could top out on a weekly basis. 3-star resistance. The key level is 175.90, anticipating over the next 3 to 5 weeks 228.13. And it looks like this on a weekly chart. 177.04, above which, and we've gapped above all that. That was the Monday gap above 177.04. That is your support now, down to 175.90, above which 228.35 on the weekly chart remains a 3 to 5 week objective where profits can be taken, a short sale set, maybe reaching out for out of the money puts, because over the following 2 to 3 months we can fall away from there. And we have shown, and are we showing it today? No, we are not. But there is a longer term objective that we have shown in the 320s as a 3 to 5 month target or sooner if we close above it. But there's only so much room in this newsletter. By the way, this is a downloadable newsletter. It's a PDF file you can get for free. I think the link is on the YouTube. If you look down underneath the screen, we also have it on the website, wickedstocks.com. So I think that pretty much rounds it out. Please click like, share, subscribe. Check out wickedstocks.com. I will be back tomorrow with Thursday's Tesla report, and you have a great day.